Good day, good morning, ladies and gentlemen. You are welcome to Speedy Success Professional. This is our tax discussion classroom, taxation discussion, the Nigerian tax system. I have decided to bring us a discussion today on the best methods of calculating and presenting personal income tax using the new law and the old law. My name is Femi Richworld Aiyeolowo. I'm the MD of Pst Richworld Professional, and I'm also a chartered accountant. Can we go ahead? Now get closer to me. Let's look at the old format. For those of us who don't know the old format of calculating, when I mean the old format, I mean the old law that guiding the personal income tax in Nigeria. Now, for Mr. Richworld or for Mr. Diwali, for Mr. Bochuku, this is how your personal income was calculated in the past. You may have incomes from employment, you may have income from business, you may be in partnership, or you may be in vocation, you may be in 2 or 3 of them together. These are classified as your earned income, so you bring them together. Now you move to the second group, your earned income. Your earned income can come from your dividend from shares you bought, interest from fixed investment, and rent from your properties or landed assets. Now, don't forget, this is Speedy Success. You want to get consulting, training, and auditing, and you want to pass your professional exam, call 08148421111, Speedy Success Professional. Our lectures and training are online. We call it physical online physical class. No matter your destination in this earth, you will get training from us. Are we ready? Now let's continue. Let's go back to our class. I'm discussing the old tax law and the new tax law for personal income tax. I am concerned with the calculation. Most of the things we see online, they just talk about. I'm here to show you, if you are the one calculating by yourself or you are calculating as a professional, this is how to go about it. Or you are the tax accountant in your company, look at my board and share. I'm saying everybody should share. This class is free, so share to all your friends. Let's go and look at it. Now, let's come closer. Now, in the old computation, there's what we call consolidated relief allowance. This is 200,000 plus 20% of gross income, the income you have after your total income. Then you will deduct that. That was old law. And if that is deducted, we'll now move to what we call the statutory deductions. Can we go? Come this way. Come this way. Let's see. Take your camera up. Now, your statutory deductions are pension contribution, national housing fund, life insurance premium, national health insurance scheme, and gratuity. And when you put all of this together and deduct from whatever you had after the deduction of considered relief, you have your total income or chargeable income, and that income is now rated in this order: the first 300,000 at 7%, and the next 300,000 at 11% to where you got this point. Now the rule says where there's minimum tax compensation, 1% of gross income, compare with what you calculated here, whichever is higher will be what is taxable. Are we together? Thank you. Now let me say it again. It is Speedy Success Professional. My name is Femi Richworld. Call us on 08148421111 or click on the link on this video for you to get more from us. Come on, let's go and discuss the new tax law, the new law, and then I have an opinion to give to the government on this matter. Now, the new law have the same format for calculating your personal income. Now, but the deductions, the only deduction approved here, as at what I saw on the platform, is 20% of your rent, or 500,000, whichever is higher, is what you are going to get, 500,000 naira. Now, when you deduct that, you still come to pick your statutory deductions, the same statutory deductions. What was included here is if you own a house which you take loan to build, the interest charge on that loan is also deductible before you can get your taxable income. Now, here is my opinion. Don't forget, share this video, share it to your neighbor, share it to your friend, and share it so that everyone can know how to calculate. Are we ready? Now, when you come to the tax rates, the first here is 800,000 naira. You will pay no tax, zero rated. But my discussion, when you come to the next income level, is 2,200,000, and the system say you will pay 15%. I am going to be giving a recommendation to the government. Now listen, I think if we compare, can you put your camera here, on the 11% that we have in this place, I think the government should not just jump from 0 to 15% that we have here. They should jump from 0 to 11, because there is a double count. When you calculate this figure, it's 2.2 times or 250% of what we have in that place. So if the government is going to jump to this place, they should jump to 11% and not 15%, if you really want to help the Nigerians who have been suffering from poor governance and poor infrastructure, and we want to take that. I am a professional, I am concerned, and I'm also a tax payer. Now, I'm thinking of this, but let's go back there. Let's go back to what we're doing. The next is 9 million, which is 18%. And so if we have done 11% here, we'll have had 15% here, and then we'll have 19% here, and probably 21 or 22 here, and then we have about 25. That will have been, for me, the best way to calculate. So it's my opinion, and I'm very serious. I'm in Nigeria, I love Nigeria. Then the next 30 million should be, 30 million is 21%, and 25%, 25 million are 43%, and above 50 million, 25%. Now, if we have put this figure here, it's also too small based on the inflation rate in Nigeria. At least people earning from 100 million annually should be on this page. Thank you. Don't forget, it is Speedy Success Professional. Share this video. My takes. Next week, you'll have another class with me on our tax discussion. God bless you.